Hello, Sarah Berry CPA, Texarkana, Texas here, and this is video 1 in our series, The Complete Financial Review Checklist. So the purpose of this series is to go over some basic things that I think every person should think about in our financial situations. So whether you're a business owner or not, I think it's important that we sit down and we go through our finances and do a checkup. Personal finances, business finances, everything. Do a checkup and see where we're at financially. Look at our personal financial statement. Talk about a budget. Set goals. Tax planning. And review our insurance. And look at wills and inheritances. You know, especially business owners, we get really busy in the day-to-day business of running our business, and we focus so much on what we think is important, but we really don't take the time to sit down and work on what really is important. And sometimes we have to shut the world out and focus on these other things. So I'm doing a series of videos here, and we're going to go over these items. Today is the Complete Financial Review Checklist, personal financial statements. So what is a personal financial statement? A personal financial statement is a snapshot of your personal financial position at any point in time. Well, that kind of sounds like a definition out of an accounting textbook. So what does that really mean when you break it down? What do you own? What assets do you own? And how much do you owe? Who do you owe? And how much do you owe? So your assets, what you own, who you owe and what you owe, that's your liabilities. You take your assets, you subtract your liabilities, and that's your net worth. And when that net worth gets over $1 million, that's when we call you a millionaire. So we're going to talk about that, and I want to go through an example of a personal financial statement. So a personal financial statement, why is it important? Well, for one, if you plan on applying for a loan or anything like that, the bank's going to ask you they want you to submit a personal financial statement. They may have a form they want you to fill out, or they may allow you to fill out one on your own in Excel or something like that. We're going to go through one in Excel that I've created and I maintain for myself and for other clients. I think it's a really good idea to maintain personal financial statements. And a personal financial statement is not something that is just, it's done once and it's completed. Your personal financial situation changes constantly. And so this is something that needs to be updated on a regular basis. At least annually is my advice to update this. Also, it's really important to have a personal financial statement because it gives us a starting point for our budgeting process and a starting point for our goal planning, which is something I really love to do personally and with my clients. I like to sit down with my clients and talk about, what are your goals? When do you plan to retire? Those sort of things. What's your goals 20 years from now? And then 15, and then let's back it up to 5. And then what do we need to reach in a year in order to reach our 20-year goals? That's so exciting to me. But you can't know, what's our goals without knowing where we're starting. We can't know how we're going to finish the race if we don't know where we're starting the race, right? So that's where we start with, is our personal financial statement. Okay, so let me pull up an example of a personal financial statement that I have completed. So this is for John Doe and Susie Q. I'm real original. So your personal balance sheet, this is not over a period of time. This is a snapshot of your personal financial statements at an exact period in time. So it's similar to if you own a business, your balance sheet in the business is a snapshot at a period in time. It's not over a period of time. It's like at a certain day. That's what you own and that's what you owe. So, for example, we list our assets on the left. That's what we own. We list our liabilities on the right. That's what we owe. Now, I will get into this more when we talk about wills and things like that, but I really like on your personal financial statements when you're keeping it for your personal purposes. I like to see account numbers, websites, login information, because if you think about this, what if something happened to you and you passed away? Because we're all going to die at some point in time. If something happened to you and you're the one who keeps up with your family's personal financials, how will your spouse or your kids or your parents, whoever comes in to take over your finances and pay your bills so that your wife and kids still have a home to live in? Will your person that picks up your financial responsibilities, will they be able to figure out where to make your house payment, who you owe, where to log in and look at all the cash accounts that you own, where your investments and those type things. So we're going to get into that more when we talk about wills and inheritances and things. But this personal financial statement, again, this is a great place to start for your wills and inheritance. Put your account numbers, your website and login, those type things on the one that you're going to keep personally. Now, obviously, the one that you're going to send to the bank, they're not probably going to want the account numbers and logins information, things like that. I wouldn't give it to them. But for your personal purposes, I recommend that, especially as we get older and we start thinking about wealth building and passing on inheritances to kids and grandkids. So enough of that, but that's what this column here is. Listing out where the cash is at and what the login information is there. So whoever takes over your personal financials will thank you greatly for that. So your assets are listed in list of liquidity. So liquidity is how liquid. So you're going to start with cash. Obviously, you can get your hands on that cash super quick. Okay, so it's listed by liquidity. The most liquid would be cash, and then you would have your investments and CDs and things like that, your retirement accounts, IRAs, because you can get your hands on that cash relatively quick, but not as quick as the cash in your checking or savings account. Okay, and then you have real estate and personal property and things like that. So let's go through these one by one. So you have your cash here listed out. Instead of a lump sum total, I like to see it broken out in detail. So you list the total of the cash, or you list each individual line item for the cash. Checking, savings, maybe you've got some cash. And here I put safe combination. You know, I mean, that is a great thing to list. Does anybody know your safe combination besides you? Things to think about. You know, financially, if something happens to you, will your wife and kids or husband or parents or grandkids, will they be able to access that safe and get that money out without getting a welding machine and a torch and cutting it apart, right? So those are all things to think about. So your total cash here, it totals to $103,000. And then on the liability side, I put your liability that is most current, or that is due, like it's all due within the next 30 days. Does that make sense? So you've got your credit cards. You get Citibank and Chase. These are just examples. Obviously, I made up numbers. So your total credit card debt would be $8,000. Your total cash would be $103,000. Retirement accounts listed in detail here, made up numbers. This is with BlackRock, maybe a TSP. Edward Jones advisor is Billy Bob. So listing that type of information, one, you're getting a personal financial statement, and two, you're also getting contact information, account numbers, phone numbers, websites, things like that, so that whoever inherits these assets will be able to access those easily with the least amount of headache. So total retirement accounts, $139,000. Obviously, no liabilities attached to those retirement accounts. Now, if you had a loan from your TSP or a loan from a 401k, then you would list that out here to the right. And then real estate. So real estate in your personal name, maybe you've got a house and the fair market value, and it has a loan on it with Quicken Mortgage for $200,000. So the value, and you're listing these at the fair market value, okay? So if you know about how much you could sell that house for. Now, you may or may not know that, so it may be a guess, but I bet you have a pretty good idea of what you could sell that property for. So you got your house at fair market value, and then what you owe on it. And then maybe you've got some land in your personal name, and it looks like that you do not owe anything on that land because you have something in the asset column and nothing in the liability column on that line. And then maybe in an investment company, you have some rental properties. This rental property has a fair market value of $150,000 and you owe $70,000 on it. Maybe you have some more rental properties that are completely paid off. So you have a fair market value of $50,000 and you do not have a loan on that. And then personal property. So personal property would be automobiles and things like jewelry, maybe a camper, maybe you've got some tractors, some farm equipment, side-by-sides, four-wheelers, and other miscellaneous personal property. It may not seem like each individual item is worth much, but when you add them up in total, it may be quite a bit. So here in this example, $74,000 in personal property automobiles and such like. Now it looks like the vehicles are not paid off. So in the wife's car, the fair market value be about $25,010 owed on it. So you would have a value, equity in that vehicle of about $15,000. And those are good things to know when you go to trade in your vehicles. So like this personal financial is just to have a good grip on your finances. Husband's truck thinks he could get about 22 for it, and he owes about 15. So he's not upside down. So what's upside down? Well, if he thinks he can get 22 for it, but he owes 30, then he's upside down in that vehicle because he owes more than it's worth. So that would be over leveraged in that particular asset. These pieces of personal property looks like there's no debt attached to that. So the total personal property fair market value of $74,000. Also, this item's a little harder to nail down, the value of the business, without doing an official appraisal of your business, a business valuation. You really don't know that number, but you probably have a decent idea of what the value of the business is. So this is just going to be a best guess here. But if you're a business owner, it's a very good possibility that a big portion of your net worth is wrapped up in the fair market value of your business. Now this is fair market value of your business. What could you sell your business for today? So this is also going to come into play when you're setting your goals. Now, if one of the big chunks of your retirement planning is selling your business in the future, then you need to know, what is this number and what do I need it to be as I get closer to retirement so that it's going to fund my retirement, and then structure it. Structure that sale to fund your retirement. So this is all great things to start thinking about. But in this example, $500,000 is the value of the business, and maybe you owe $150,000 on that. You have business debt of $150,000. So you subtract that out. Okay, so going back up, you have your assets here in column D. So the total of your assets is $1.4 million, $1,426,000. Your liabilities, $453,000. Here, so your net worth is almost $1 million. So if you could pay off a few items of debt, then you could officially call yourself a millionaire. It's pretty cool. Okay, so items to note on your personal financial statement, obviously net worth, and that's important. That's important to you, that's important to the bank, and that's important when you get a loan, when you pass this on to your kids, and those type things. Also important to notice if you're over leveraged on any assets, like I pointed out about the vehicles. If you had a value of 22 on husband's truck, but you owed 30, you would be upside down. You'd be over leveraged on those particular assets. Things to consider. Also, when looking at a personal financial statement, you might want to see, do I have enough cash? I mean, I've seen people who are multimillionaires, but they're cash poor, and they can't hardly pay their bills because all of their equity is wrapped up in land, and you can't eat land. So sometimes that is an issue. So you want to make for sure that you have enough cash. But then on the flip side, I have seen other clients who have all of their equity wrapped up in cash, and the interest rate's really low right now. So you're not getting a good return on your investment. With real estate prices increasing, maybe you need to take some of that cash and invest it in the real estate market as we go into this inflation period here. So those are all things to think about on the personal financial statements. I'm going to wrap it up here. I could talk forever about it, but next week I'm going to do another video, and let's see what next week's is going to be about. Budgeting. So that's going to be fun. Anyways, talk to you guys later. Thanks for watching.